Agency owners, you're probably leaving thousands of dollars on the table every single year. No, I'm not talking about bad clients who ghost you after asking for one more revision. I'm talking about tax deductions. The tax code is like a jungle, and if you don't know where to look, the IRS will gladly keep your hard-earned money. But today I'm giving you the CFO playbook. That's 7 tax deductions you must be using to lower your tax bill, improve cash flow, and keep more profit in your pocket. Stick around because number 6 is one that most agency owners completely overlook, but it's a game changer. Let's get into it. All right, so here's the deal. Running an agency is not cheap. You've got software subscriptions, contractors, marketing expenses, and before you know it, Uncle Sam is knocking on the door asking for his cut. The biggest issues, most agency owners don't have a solid tax strategy. They assume their CPA has it covered or think QuickBooks will magically save them money. But spoiler alert, it won't. Let's take Joe for an example. Now, he's an agency owner who scaled fast but had zero tax planning in place. At the end of the year, he was hit with a $75,000 tax bill because he didn't track deductions properly. Imagine the things he could have done with that money: hiring, investing in better systems, or finally upgrading from that free Canva account. So how do we fix this? Let's start with the biggest tax deductions that can instantly reduce your tax bill. Before we get into the good stuff, let's talk about what not to do, because most business owners are making at least one of these mistakes. Not tracking expenses properly. If you're still mixing personal and business expenses, the IRS is going to love auditing you. Ignoring tax advantage retirement accounts. Most agency owners leave thousands in potential tax savings by not using solo 401ks or SEP IRAs. Paying yourself wrong. If you're an S Corp and not splitting salary versus distribution strategically, you're probably overpaying in self-employment taxes. Missing the hidden deductions, home office, advertising costs, even that client dinner where you totally talked about business. These are deductions most people forget about. So now that we've cleared that up, let's dive into the CFO playbook. And that's 7 deductions every single agency owner needs to use right now. Before we get into that list, quick reminder, if you want hands-on help implementing this and really optimizing your finances, my team works with a select number of agency owners every single month. If you're serious about saving money on taxes and scaling profitably, hit that link below to apply. All right, now let's talk deductions. If you're not taking advantage of these, you're donating extra money to the IRS, and we need to fix that ASAP. Number 1 is the home office deduction. So if you work from home, you can write off a portion of your rent, mortgage, utilities, and internet. This applies even if you rent. You don't need to own your home to claim it. The space must be exclusively used for business, so there's no claiming your couch while binge watching Netflix. 2 ways to claim it. One is the simplified method where the IRS gives you $5 per square foot for up to 300 square foot. So that total deduction is $1,500. Not really going to move the needle if you're a 7-figure business. Now there's also the actual expense method where you calculate the percentage of your home used for work versus business. And this is prorated for rent, utilities, internet, you name it. Now here's a pro tip. If you're renting, this deduction helps you offset part of your rent, turning a personal expense into a business tax benefit. So number 2 is software and subscriptions. Any software you use for your agency is 100% deductible. So that's Adobe Creative Cloud, Slack, ClickUp, etc. Domain names you're buying for clients, hosting fees, and web tools, all tax deductible. AI tools, ChatGPT, yep, that's included. Even YouTube Premium. If you're using it for research or ad-free client calls, this can be written off. So here's another pro tip, and your CPA will love you. Keep a separate business card for all software subscriptions. So if you're mixing personal and business expenses, you're making tax season a nightmare. Number 3 is going to be advertising and marketing. So Facebook ads, Google ads, Instagram promotions, all that's fully tax deductible. Running a podcast or YouTube channel for business, production costs count. Business branding, logos, website redesigns, and even paid networking events. Promotional gifts qualify in most cases, but you need to follow the rules. And if you're running ads, track your ROI. The IRS won't question a deduction if it's part of a strategy to generate revenue. Number 4 is business travel and meals. So flights, hotels, Ubers, fully deductible if for business purposes. Conferences, mastermind events, and in-person client meetings, all that stuff counts. Business meals are 50% deductible, but client entertainment unfortunately is not. So there's no writing off that skydiving trip with your favorite client. Meals while traveling for work, 100% deductible in many cases. So here's a tip. When you're dining with your clients, always remember to write the who, what, why on the receipt. And this is going to keep you audit proof in case Uncle Sam comes knocking. So number 5 is contractor and freelance payments. So hiring freelancers for copywriting, design, or ads, their payments are fully tax deductible. Using a virtual assistant, maybe you got a video editor, maybe you've got marketing consultants and sales closers, all that stuff is tax deductible in your business. Now, if you pay an independent contractor over $600 per year, don't forget that you need to issue them a 1099 NEC at the end of the year. Otherwise, the IRS could disallow this deduction. Now, here's a pro tip. Instead of hiring full-time employees, agencies can scale lean with 1099 contractors, and it's tax efficient. Just track your payments properly and make sure you're not tiptoeing in employee versus contractor issues. So they gotta be independent contractors. Number 6 is health insurance and retirement contributions. So if you're self-employed, your health insurance premiums are deductible. Setting up a solo 401k or SEP IRA lets you stash away money tax-free for retirement while also lowering your taxable income. Now, contributions to a solo 401k can be up to $69,000 per year if we're talking 2024, and each year that is adjusted for inflation. Now, here's a tax planning pro tip. A solo 401k is way better than an IRA if you're an agency owner, and that's because you can contribute as both an employee and the employer, and it requires less W-2 wage than a SEP IRA would. All right, number 7 is my favorite. So that's going to be business equipment and depreciation. So if you've got a new laptop, camera gear, microphones, iPads, external hard drives, all that's tax deductible. Desk chairs and ergonomic office setups also qualify. The IRS will allow you to expense it all in 1 year using what's called Section 179, or you can depreciate it over time, and this is for bigger purchases or if you don't need the write-off all in 1 year. Now, here's a pro tip. If you need new gear, try and buy it before the end of the year to maximize deductions for this current tax cycle. Now, I know I mentioned we're only going to give 7 tax deductions, but if you made it this far in the video, I'm feeling nice. So I'm going to give you actually 3 more bonus deductions if you're serious about saving money. The first one is going to be related to self-employment tax. So that's going to be S-Corp salary optimization. If you're an S-Corp owner, structuring your salary versus distributions properly can save thousands in self-employment taxes. Bonus deduction number 2 is going to be renting your home to your business using what's called the Augusta rule. So you can rent your home to your own business for up to 14 days per year tax-free, but there are specific rules that you must follow. Now, the last bonus deduction is going to be vehicle write-offs. So if you drive for business, you can deduct your mileage or you can write off a portion of your vehicle purchase, especially if it's over 6,000 pounds. Alrighty, family. So now that you know the 7 must-use deductions for agency owners, there's no more excuses for overpaying in taxes. But here's the deal. Tax strategy isn't just about deductions. It's about proactive planning. So if you want to actually keep more of what you earn and scale profitably, my team at Hourglass Advisors can help. We only take a select number of agency owners and online businesses each month. So if you're serious about getting your finances dialed in, click the link below to apply with our team. Now, before you go, I want you to drop a comment below. What's the weirdest thing that you've ever tried to write off as a business expense? I want to hear the wild ones. Also, hit that like button if you got value from this video. Subscribe for more CFO level insights, and I will catch you at the next one. Have a good one.